So we're going to talk about Social Security and as it pertains to retirement. We're going to talk about all those things you need to consider because planning for retirement is definitely something that is a process and that we need to spend some time on. Some research shows that some people spend more time planning a vacation than they do planning for their retirement. And trust me, at the end of the session, you'll understand why you definitely need to take some time and plan. And I'm going to give you some of the tools that you need, for those of you that are not yet collecting benefits from us, the tools and the information you need so that you can make that very important decision and have the right tools to help you come to determine when is the best time for you. And all that is also needed when it comes to doing your research about Medicare. I'm sure you've heard about Medicare, right? So I'll talk to you about some of the things you need to consider and some of the things you need to do some research on when it comes to Medicare choices, because that's another very important piece of the whole retirement picture. Okay? So I think we all know, or we're better informed or educated today, that we know that Social Security was never intended to be anyone's sole source of income in retirement, right? We all may know people that just live on Social Security. It's a wonderful program intended to keep people out of poverty, but it was never intended to be anyone's sole source of income. I think today, generations coming into retirement know that if you don't have a pension, that hopefully you're putting some of your money aside in some form of savings so that together with your Social Security, you can have the retirement of your dreams, right? We all have dreams of how we want to spend our retirement. And I'm sure penny pinching is not one of them, right? So we like to say that Social Security is that foundation, right? It starts with Social Security, but we hope that we're all planning, and if you don't have a pension, at least that you are putting some funds aside for that very important time of your life. So this number has actually just been updated. We just hit the 60 million mark. 60 million people receiving Social Security in one form or another. So that's pretty significant, wouldn't you say? Of course, the largest percentage of beneficiaries are the retired population. But Social Security is more than that. Social Security is that safety net, I like to say, America's safety net that not only provides benefits in retirement, and that's when we hope to receive it, right? But it's also there as a disability program, right? No one plans for that, but we all know that a disability can occur at any age. And again, we're that program that can help people maintain a level of dignity and have some income for themselves and possibly some eligible family members, you know, folks that have kids, a spouse that they're raising and now become unable to work due to an illness or accident. We're also that program that provides benefits to folks when they pass away before their time and leave behind spouse, children. Right? So again, look at the number of people that are widows or widowers or children of deceased that rely on Social Security. Okay? It's a very important, very important program to Americans. So how do we qualify for this benefit? Well, we have to work and pay into FICA. Right? Not all of us do. Some of our friends who work for the municipalities, or some of our friends who work for the state, and there may be some of you in this room that perhaps are not paying full FICA into Social Security, right? Because you're paying into an alternative pension system. But to qualify for Social Security, we need to have enough credits. You may have heard the term quarters. That's an older term because it used to be years ago that you could only earn a quarter in a quarter of the year. It doesn't matter now, so we call them credits. And to qualify for a retirement benefit, we say you need at least 40 credits or 10 years of work. Of course, our formula looks at your best 35 years. Okay? But to qualify for something from Social Security, perhaps you're that municipal employee or perhaps you worked for the state most of your working career, right? And when you look at your statement from Social Security, it shows maybe you're short a few credits. Well, as you can see, it doesn't take a whole lot of money to earn those credits you may be short. This amount increases every year, but this year, for every $12.60 you earn in the private sector, you earn a credit. Okay? My daughter had the lesson this year when she started her first job scooping ice cream, and she saw that FICA deduction on her check. She was horrified, and I tried to tell her, you're already paying into Social Security, isn't that great? Well, she didn't think so, because remember being young, you never think you're going to be old, or let alone retire. But anyway, it was my opportunity to tell her about this program and how as soon as we start working, we're already paying in, for retirement, possibly disability benefits, okay? So I think she earned 1 credit this last summer. So, but 4 is the maximum that we can earn per year. Okay, again, it doesn't have to be earned throughout the year. It can be earned in a week, in a month. Okay, so if you're that person that is trying to attain insured status, maybe you're short a few credits, it doesn't take all that much. And remember, this is another guaranteed benefit, even though for some of you who maybe did work for the state or for the municipalities most of your working career, understood this may not represent the biggest piece or the most significant piece of your retirement, but who's going to refuse another check in retirement? That includes Medicare, and payable until death. Okay, so again, something to consider. So when can you start collecting Social Security? Well, I'm sure you're all aware that full retirement age has gradually increased. And for the baby boomers that we see today filing for retirement, born between 1943 and 54, that age is 66, right? Is that most of us in this room? And then it's incrementally increased by 2 months until it becomes age 67 for everyone born after 1960. So just determining when should I collect, when should I start to receive Social Security? Well, you can as early as 62, but Social Security says there are limits on how much you can earn if you're still working. And that benefit is reduced permanently, about 25% less than as opposed to you to wait until your full retirement age. The other thing to consider is health insurance. Most of us, we leave our jobs, health insurance is canceled the next day, right? So what are you going to do for health insurance? Again, through the Affordable Care Act, we do have more affordable options for that interim period, thankfully. But again, that's something to consider, right? Some of you may still want to work, right, at 62. So if you're going to earn over the limits that Social Security sets, then you may want to change your mind and rethink your plan. At your full retirement age, by then, you should already be eligible for Medicare, because Medicare, the magic age for that is what? 65. That has not changed. Medicare age is still 65. Full retirement age pertains to your cash benefits, when you can receive your full benefits, no reduction for age. And the other difference is at full retirement age, if you're that person that loves your job but you can't even think about retiring, well, you can still work full-time at full retirement age and collect Social Security. Once you reach full retirement age, there is no limit on your earnings, okay? But there is in the years and months up to your full retirement age. And we'll talk about that a little bit more in more detail in the next few slides. Some folks, if you've ever sat with a financial planner or read those publications about money and investing, you may have heard about these strategies on how to maximize your Social Security. And some folks that, maybe some of our friends are self-employed, some of our friends who don't have pensions may utilize this one. Did you know that if you delay collecting your Social Security benefits beyond your full retirement age, they increase an additional 8%? It does cap at age 70, but if you were to wait until age 70, you would gain an extra 32% on top of your full retirement age benefit. Where else can you get 8% these days, right? So not bad. Not for all. Of course, if you're someone who's ill, poor health, you don't have longevity, does it make sense to delay? Probably not. But if the opposite is true, that may be a consideration for you. Okay? So again, you can apply as early as age 62, but remember that that is a permanently reduced benefit. Some people say, but doesn't it increase to the full retirement age amount when I reach that age? Nope. The only increase that you would receive is any cost of living adjustment come January. Okay? But once you take a reduced benefit, in most instances you are locked in at that amount. If you do not want a reduction in your benefits, you have to wait until the full retirement age. Okay? If you want to increase them more, you'll be waiting until age 70. It doesn't mean you have to wait till 70, but even every year or even every month beyond your full retirement age that you delay collecting your Social Security, it increases. But to collect that full 8%, of course you have to wait for a full year. Okay? So if you don't already know what your full retirement age is, this chart illustrates how it's incrementally increased after 1954. So what currently is age 66 will then become 66 in 2 months. For those born in 56, 66 in 4 months, until it becomes 67 for everyone born after 1960. So, again, as I said, Social Security is that safety net that can not only include benefits for yourself, but perhaps any eligible family members. You may have a spouse that didn't work outside the home or didn't earn much outside the home. That may qualify for part of your Social Security benefit. Some of you in retirement may still have minor children. They too could qualify for up to 50% of your benefit, and it doesn't reduce yours in any way. That's an additional benefit. And the kids can collect up until age 18, 19 if they're in high school. Some of you may have a disabled child, right? A child that's unmarried and has a disability, physical or mental or even a combination. And this child cannot support themselves because of a disability that started prior to age 22. That's the key. That child could also collect up to 50% of your benefit. And remember, unlike our other disability program that we offer for children that are disabled, that looks at income, looks at assets, this is not a needs-based program. And that's very comforting for parents who leave a child behind that is disabled. And when they do pass, that benefit goes from 50% to 75% of the parent's Social Security benefit. So it's really a great thing, very comforting to parents that have a child in a situation like that. The ex-spouse. The ex-spouses are special. Unlike the current spouse that has to wait until her spouse applies and starts receiving Social Security benefit, the ex-spouses are special. They don't have to wait. As long as both parties are at least age 62 and the duration of marriage requirement is met, that application can be filed. And unlike most applications for Social Security that don't require any documentation to be sent along, we do require the marriage certificate and final divorce decree for anyone claiming benefits as an ex-spouse. But just like any other spouse, to be eligible for this benefit, half of the spouse's or ex-spouse's benefit has to be greater than their own full benefit. It's a dependency. Spouse's benefits are based on dependency, right? So there are many that won't qualify because they did work and have their own Social Security benefit, right? I'll probably never have a spousal benefit myself because I always worked. But again, it's based on dependency. And a lot of people that wouldn't be aware and are concerned about missing any entitlement, it's our job to ensure that we pay you or pay anyone that submits an application every dollar they're due. And we ask these questions in the application. We ask, are you married? Where are you married? Because we're looking to see anyone do extra money based on those relationships. Okay? So in life, the most that a spouse can receive is 50% of the spouse's full Social Security benefit. Of course, if the spouse is taking it prior to their full retirement age, that's reduced for age. Okay, but 50% is the most in life. A widow, a widower, of course the percentages are different. It can be from 71.5% of the deceased's full Social Security benefit up to 100% of the deceased's Social Security benefit. Factors that we look into are the age of the applicant, the age of the widow or widower, and whether the deceased took Social Security benefit. And did they take it early or did they not? Okay, and that will determine how much then the widow or widower would be entitled to. So it's not always a clear-cut percentage across the board. Okay. So, unlike retirement benefits, I thought it was important to talk about survivor benefits as well. We'll briefly touch upon that because there might be some people in the room that could benefit from this information. Surviving spouses, widows or widowers can apply for Social Security as early as age 60. 50 if disabled, any age if caring for the minor or disabled children of the deceased. But it's important to know that just like the retiree that's under full retirement age, that has those limitations on earnings, so do the survivors. Okay. If I, God forbid, were to become a widow, I have children, they would be eligible, but I would not because I'm working full time. Okay. So that's a fact that some people misunderstand. Anyone receiving benefits from Social Security, if you are under full retirement age, and that includes survivors, and their children too. We had a child the other day who I was shocked to see how much they earned. Typically, kids don't make that much, but this child was in a vocational school, in a co-op, and did exceed those limits that Social Security sets. So the children, any auxiliary benefits are also subject to those earnings limitations, so just something to be aware of, okay? The lump sum death benefit is the one-time payment of $255 that Social Security pays to the surviving spouse. We're usually notified of the death of a beneficiary by the funeral directors. They're very good about notifying us and then letting us know who the survivors are, so that if they don't reach out to us to apply for benefits, we will reach out to them, okay, to see how they do widows or widowers benefits and who's due the lump sum death payment of $255. Our definition of disability, and I'll just briefly touch upon this in case there's anyone in the room that is curious about our disability program. Unlike retirement benefits that you require 40 credits, and it doesn't matter when you earn them to qualify, I guess the first thing we look at, if you're contacting us about Social Security disability, we look at, did you work? Did you work long enough? And recently enough? Okay. And generally speaking, for someone who becomes disabled after the age of 31, they need to have paid into Social Security 5 out of the last 10 years to be insured for disability benefit. Okay. Of course, younger folks do not require that much of a work history to qualify. But then the other factor is our medical decision. The applicant has to have a condition that's expected to keep them out of work for a period of 12 months or more, or a condition that will result in death. Does that mean the person has to wait a year to apply? No, but the medical evidence has to suggest that, considering those things, that the person will be out of work for a year or more. Meaning, a temporary disability, you probably wouldn't qualify for Social Security. Now, if complications occur, right, someone, for example, who suffers an accident on a motorcycle, breaks a leg, expected to be out 3 to 6 months, but then complications occur, infections, and now they've been out a year. Okay, that changes things, right? But medical evidence has to suggest that the person is going to be out of work and unable to perform any type of work considering their age, education, and work experience. Okay? So, unlike some defined benefits and pensions that look at an individual's last 5 years or highest 3 years of earnings, we're looking at a lifetime of earnings to calculate your benefit. And one of the things we ask people to do to ensure that the information we have to calculate the benefit is correct is we ask everyone to look at their statement every year. And unfortunately, you may be aware that we ceased the automatic mailing of that statement annually, but we still want you to look at it every year. Once you turn 60, however, we will send it to you every year if you're not yet a beneficiary. But for those of you who don't have one, we encourage you to go online and create a My Social Security account. How many of you have done that? Very good, very good. Shame on the rest of you, that's your homework today.
So if you set up an online account, they won't mail it to you?
Well, because if you're able to set up the account online, you wouldn't need to get a paper copy, save the government some money. Easy to do, and we want you to do it every year, because it's a lot easier for us to make any correction to any discrepancy that you identify today than maybe 10 or 15 years from now when you say, oh, I'm applying for retirement. But 2005 is wrong, or 1995 is missing. Okay? So that's why we encourage everyone to tell your family and friends they should create their account and look at their statement every year. It says reported by the IRS, and again, in the majority of the cases, it's correct. But that's how we base your benefits, so we want to make sure people are looking at it and identifying any discrepancies right away. It's also a picture into what your future benefits will be, right? It shows estimates for retirement, disability, God forbid you become unable to work, that you and your family can qualify for, and even if you should pass away, what your surviving family members could expect to receive. So this is a computational example of someone with pre-retirement income this year of about $5,200 a month, turning 66 this year, what they might expect to receive in a Social Security benefit, about $2,153. For Social Security recipients, this is going to be a rate of return for the average wage earner, about 41%. See why I mean it's important to save, to make sure we have other income and savings? This is great, but we have to make sure we have other savings in place or other income in place to supplement it, because it's not a total replacement of our income. So I mentioned earlier that Social Security says if you're under full retirement age, there's a limit on how much you can earn each year. And each year these amounts change. This year, if you are under full retirement age, you can earn no more than $15,720. And what happens if you exceed that amount? You apply for retirement and you say, I've had it, I'm not going to work. But your employer bugs you and calls you to come back in, cover shifts, work overtime, and it's September and you look at your year-to-date and you've already reached that amount. If you exceed that amount and you don't let us know in advance, you have to pay us back $1 for every $2 that you earn in excess. And our friends, the IRS, will let us know very promptly how much you earned, so better that you let us know in advance so you can avoid that unpleasant, letter that will come in the mail sometime in January saying, IRS said you earned X amount of dollars. So look at how much more you can earn the year you reach full retirement age. This year it's $41,880. These are gross earnings. And earnings, not pensions, not IRAs, not unemployment, not workers' comp, earnings. What appears on your W-2 or your net from self-employment if you're self-employed. But remember how I said, from the month you reach full retirement age going forward, you can earn whatever you want. So let me give you an example of how this would work. So say on January 2nd, I go to socialsecurity.gov and I apply for my retirement. But I'm turning 66 in June, but I want to start collecting in January. Yes, my benefits will be slightly reduced, but I want to collect. Social Security is only concerned with what I earn from January 1st through May 31st. Because from June on, I can earn whatever I want. And as long as during that period I earn less than that 41,000 figure, I'm fine. But if I exceed that, then I'd have to pay back $1 for every 3 earned in excess. Right? You understand how that works?
It doesn't apply to the windfall, the pension.
This is just, windfall is another way we have to compute your benefit if you're eligible for municipal or state pension from Massachusetts. Not all states have those alternative pensions. Some states contribute into Social Security. Massachusetts is one of those states that do not. No. This is money from earnings. If you're a beneficiary, that amount is just earnings. Okay? Not pensions, not annuities, just earnings. So, remember I said trying to determine when to retire and when to collect is a process. We have great tools to allow you to play around with different scenarios and consider different ages without having to take time out of work and go into the local office and wait what could be a painful amount of time. I'm not going to fib and say you're going to walk right in. That's just not true, unfortunately. We're just too busy, and there are too many of you filing for retirement. 10,000 people a day are turning 62, so our offices are just flooded. So again, we're still there to serve you, but we have other ways that you can get some of this information quickly at your convenience. So if you go onto our website and click on Estimate My Benefit, and you're retirement age, and you think, gee, I'm having a bad day, what would I get right now if I retire from Social Security? You can get that information, get a very good estimate. And if you want to change the work pattern, like say, your statement reflects an estimate based on what you're earning now and projecting that you're going to earn at that level going forward. But what if you're someone who's 60 who said, I've worked since I was 15 and I've heard people say this. I've worked all my life, I've saved, I've made good investments. What happens to my benefit if I now stop working and stop contributing into Social Security? I tell them, use the estimator and put in zeros until whatever age you're considering to receive benefits from us and see what effect that would have. Because remember, we use your best 35 years of earnings, right? So again, it won't be what's on the statement because the statement is considering that you're going to continue or expecting you're going to continue to work, okay? So the estimator is a great tool for those what-if scenarios. And again, the estimator, the statement estimates show age 62, your full retirement age is 70. But what about any age in between? Well, then you want to use the estimator. And to your point, if you're someone that's going to be affected by that windfall elimination provision, do we have any folks that are going to be eligible for state pensions or municipal pensions? No. So we have estimators online that factor that modified formula. And again, everyone's work history is different. For some people that just have the minimum paid into Social Security, it's see a 2/3 reduction. For some of you, maybe this is a second career, maybe the majority of your work was in the private sector. Everyone's case is different. Use our estimator. You get a very good estimate. Except for those folks, the first thing you have to do is create your My Social Security account and print your statement. Because for that special estimator tool that factors in that windfall elimination provision, it asks you from your statement to type in what you earned in the private sector. It'll show all the series of years blank, and you type in what you earned in the private sector, followed by an estimate of your pension and the age that you're interested in collecting. You get a very good estimate. Again, great planning tool. And you're trying to determine what it would be at one age versus another. Okay? That's homework assignment number 2. So again, My Social Security, it's a big campaign right now. Trying to let everyone know, plan for your someday. When I used to be a claims rep, everyone that would sit across from my desk would say, I can't believe I'm already at this point in my life. It just happens so fast, right? Do you feel that way? And it's true. I hear that every day from people, but we have to plan, we have to think about it, and this is a great tool that, again, without having to go into the office and wait your turn or be on hold if you call. This is a nice way to get that information quickly, right? Most of us are already doing our shopping and our banking that way, so we have to keep up, we have to offer the same services that the private sector does, the services that people want. So when you're ready for that very important time in your life, you have different ways to apply. Of course, as I said, you can apply online, pretty much any day of the week, anytime, no parking, no waits. In as little as 15 minutes, you can submit your application. Or, of course, you can still visit the office. Or call and ask for a phone appointment. Okay? Our 1-800 number is available every day, Monday through Friday, 7 a.m. to 7 p.m. The office, however, is open 9 to 4, and they close at noon on Wednesdays. Okay, so a little bit more restricted hours. Okay, the applications that are available online: retirement, Medicare, disability, extra health program, the Medicare Part D, which I'm going to talk about next. Okay, the estimator, all available online. And also through that My Social Security account, once you become a beneficiary, simple transactions like, I'm moving to Florida for the winter, let me let Social Security know. Do that through your account. If you lost your Medicare card, replace it through your My Social Security account. And soon, I thought I heard someone say they can't find their Social Security card. We're piloting in some states replacement card processing through My Social Security. So soon, I'm sure that'll be rolled out in Massachusetts as well. What do you need when you apply? Of course, your Social Security number, not the card, but the number. We also ask about earnings, if you're still working. Depending upon the time of year that you're applying, if we don't already have your up-to-date earnings, we might ask you for a W-2 if it's not already reflected on our records. But these days, the exchange of information coming so quickly from, employer to IRS and to us, usually by mid-January, we already have it. Direct deposit is a requirement. It's not our requirement, it's Treasury's. Any federal benefit has to be paid via direct deposit. And honestly, it's the most safe way, right, to receive your money. So have your favorite bank's routing number and your account number handy. You're going to need that. Information about marriages. We do ask, and that we're being nosy. We're just looking to see, is anyone due any extra money based on those relationships? Okay. If you have their Social Security numbers, that's very helpful. But if you don't, we can always find it if you give us their dates of birth. Okay. Taxation.
The last line on that if you go back, you said, no information about military or government service?
Oh yeah, we ask about military time. Most of it we're already able to verify. So if we don't already have proof of your military on our records, we would ask for a DD 214
And why is that?
to give you the Social Security credits. If it's a period of time that is not already reflected on your earnings statement, we'd ask you for your DD 214 so that you can get credit for that time, especially if it's going to increase your benefit.
Okay.
So we ask about that too. Okay. Railroad service, if it's over 7 years of service, and not that we see too much of that in this region, but if you do, then we have to transfer jurisdiction to the railroad board in a case like that, so that's why we ask. So about taxation. All I know about taxation is, yes, it could be taxable. We will not withhold any taxes from your benefit unless you want us to. So when you apply, you know you're going to be at a bracket that you'll probably have to pay tax on some of your Social Security because you have other income. You can let us know and we can deduct a percentage for federal income tax. If you change your mind later, you can just send us a new W-4 saying increase it, decrease it, stop it. Okay, it's as easy as that. Just go to IRS's website to get that form. All right, we will send you the 1099 every year when you become a beneficiary, so that if you do need to file income taxes, you'll have that document. Medicare. Medicare, that little red, white, and blue card that at one point we'll all qualify for. Age 65 is the key age. Okay, it's still available at 65. Some folks are eligible for it at a younger age, and that's if, in most cases, they're on disability. They're receiving Social Security disability, in which case they would be enrolled in Medicare after serving a 24-month waiting period. They don't have to reapply, it's an automatic. We'd send them the card, enrolling them in Part A and B of Medicare. And I'm going to talk about what A and B of Medicare is next. Medicare also is there to help people that are going through dialysis treatment, so even if they need a transplant. But a lot of people aren't aware of this, but the clinicians know. So anyone that is in treatment for dialysis or is on a list for a transplant, the clinicians let us know. They send us a lead saying, this person started treatment, they might need Medicare, and we reach out to see if Medicare can help. Okay? And that's for folks at any age. Even children that don't have a work history can qualify based on their parents' contributions into Social Security. Okay, and that's again because of the high cost associated with those treatments, so it can really help people. Determining whether you need Medicare. So a lot of us are working well beyond age 65, right? If you're working full-time and you're covered through your employer, you don't need to enroll in Medicare. Okay? But if you're not, if you're retired or no longer covered through the employer group plan because you reduced your hours, you're part-time, no longer covered through a large group plan, you need to enroll in Medicare 3 months before your 65th birthday. 3 months before, 3 months after. That's your enrollment period. That's your initial enrollment period. Okay? There are penalties, as you may have heard, for late enrollment. So if you weren't covered through an employer, weren't covered through an employer plan, through virtue of your own employment or perhaps through a spouse, you can use Part B if you're 65 and covered through your spouse's employer. Okay? But if that's not the case, and you say, no, I'm not going to take it, you could be penalized. 10% for every year that you didn't take it. It's insurance just like every other. We hate to pay for it, but we're glad we have it when we need it. So Medicare does have really specific rules about enrollment and when we should enroll. Okay? Yes?
Can I just ask, that, if your spouse is carrying you with their insurance and you turn 65, it's when that spouse loses that insurance or that person retires that
Whatever comes first.
But you're not penalized from that time.
As long as you enroll within 8 months from that spouse's stopping work or insurance ending, whichever comes first. And usually it's work stoppage.
And that's within
And then-
the 8 months before that?
Before, you would both need to enroll in Medicare within 8 months of his stopping work or his insurance with a large group plan ending, whichever comes first. And then no penalty.
And so no penalty follows?
No. If you
Okay.
came to us on the 11th month, then we'd have to tell you to come back during the general enrollment period, which is January 1st through March 31st. Then your Part B, which is the part you'll use the most when you're on Medicare, would only be effective in July. So look at the possible gaps someone could be facing. So I tell people, a couple months before your anticipated retirement, go online and get the forms, or call us and get the forms and enroll, so there's no gap in a case like that. When you're delaying Medicare because you're covered through the employer, okay? By virtue of your employment or your spouse's. That's fine, just make sure you contact us right away. And again, you can start the process a few months from the anticipated retirement day.
So do we let you know that they're going to delay, or do we let you know that we want to sign up?
So if you're a beneficiary, if you're collecting benefits from us, we would automatically enroll you in Part A and B of Medicare.
Right.
And if you get the card in the mail and say, oh, no thanks, I don't need it, I'm covered through my spouse's employer. Okay, you send the card back to us, we'll disenroll you from B, if that's the case, and tell you, make sure you come back or contact us to enroll in Part B during your special enrollment period, which is that 8-month window. Okay, for someone who's covered still through their employer at age 65 plus, right? So your initial enrollment period, if you're retired, not covered through the employer group plan, 3 months before, 3 months after your 65th birthday. I don't recommend filing after your 65th birthday, because then it delays your Part B effective date. So you really want to enroll 3 months before so it can be effective as of the first day of the month of your 65th birthday. Okay, and then I'll talk about a little bit more why.
My husband has been working full-time and we're with Blue Cross, but we were told we had to get our Medicare card.
So if you're part of a small employer group plan,
Okay.
that's different. Large group plan, you can stay on the employer plan, but when you're part of a smaller group plan, or even some folks that are self-employed pay a considerable amount for their insurance because they're not part of a large group. Excuse me. It might be more affordable to go on Medicare, even purchasing the supplement.
Now, my card I had to send back because it had Part A and B. But I was under the understanding that even though we don't use the Medicare card, we were told to still have it.
Through the insurance, so it must be a small group plan.
Well, it's with National Grid, so.
But is it through an employer?
Mhm.
But is it a small employer or a big employer?
Well, the Cape is small.
Yeah, if it's a small group,
Okay, because we were told to have it, but we don't use it
yeah.
because we're still.
It's insurance, just like any other,
Okay.
you know, just like car
But when
insurance.
he retires, we definitely need to get Part B probably.
He's not 65 yet?
Well, he's gonna retire when he's 70
Okay.
next year,
So he's not picking up Part B now?
because we're still under Blue Cross.
Well, we'll talk after.
Okay.
We'll talk after.
So if you are still working and you're getting insurance, let's say Blue Cross through the employer, you do not have to sign up for
Right, you're
Medicare.
part of a large group plan,
But may you?
if you want.
Well, there's a good reason, because insurances these days, you know, the company's plan is a high deductible, and co-pays are now approaching $40 per usage of a doctor's visit in some companies with the plans they have you signed up for. So may such a person sign up for Medicare?
They can, but because a lot of people now, through the employers, have these very high deductible insurance plans, and in turn are offered these HSAs as a cost savings to help absorb some of those expenses. The IRS says you can't have Part A of Medicare and an HSA. So there could be some tax implications if you still carry the employer plan with an HSA and have Medicare.
Okay, but if the employer does not offer an HSA, it's
And that's
just,
something,
this
that's
is our
some-
health insurance plan and you have a $5,000 deductible and your co-pays are $40, take it or leave it.
yeah, so you might want to consider. But remember, and I'm going to talk about next what Medicare covers, how much coverage it is.
What's HSA?
An HSA, a health savings account, it allows you to put money aside tax-free
Although I,
for your high deductible.
my situation is that the employer makes you go to Medicare, and then you get a supplemental plan that's of a reduced.
If you're a state employee, state retiree or municipal retiree, yes, upon retirement, you must enroll in Medicare A and B. Yeah, and then they become your supplement. That became a law in Massachusetts in 2012. Some municipalities, for budgetary reasons, had already adopted legislation that said that. But under Governor Patrick, it became a law that every municipality said every retiree upon retirement must enroll in Part A and B of Medicare if they are eligible. And then the town insurance becomes a supplement. The state of Massachusetts has been doing that for years. State retirees have had to enroll in Medicare upon retirement for years. So there are a few parts to Medicare. There's A, B, sometimes C, and D. A is your hospital insurance, just like it sounds. Covers you whenever you have any inpatient stay at the hospital. It's free as long as you are insured for a benefit. You can also get it for free if you are the spouse of someone who is insured for a Social Security benefit. So see how there are many ways you can get Medicare? Okay. It has a deductible, but we'll talk about later how you can get those deductibles covered. Part B is your medical insurance. That's the part you'll utilize the most, quite honestly, because that covers you whenever you go to the doctor. Outpatient, tests, blood work, even emergency room is billed under Part B. That has a monthly premium. Most of us will pay a monthly premium, unless we're indigent, low income, in which case the state could help us pay that, but most of us will pay for Part B of Medicare. This year, the standard premium is $121.80. If you're receiving a check, we will deduct that from your monthly benefit. If you are not, you're just a Medicare beneficiary, maybe you want to delay receipt of your cash benefits, we'll bill you quarterly for those premiums. Okay? Some folks with higher income will pay a little bit more for their Part B. That wasn't always the fact, but it is. Of course, we know your health insurance doesn't just cost $121, the government's subsidizing the rest, right? So some of our friends with higher incomes might pay a little bit more. The IRS will look back 2 years and give us your adjusted gross income, and your Medicare premium will be determined accordingly. So for an individual, if you have income in excess of $80,000, you may pay more for your Medicare. For couples with adjusted gross income of in excess of $175,000, you might pay a little bit more for your Medicare. If you're curious about that, if you go onto our website, there's a publication, Medicare premiums for higher income individuals, and on the flip side, there's a chart that reflects the different brackets, and you can see depending on where you fall, where your income is, and you'll see how much your Medicare premium will be. Doesn't necessarily mean that's forever, income, changes because you stopped work, death of spouse, marriage, divorce, loss of pension income, any one of those life-changing events, you report that to us, and we will adjust or remove that higher assessment, and you would go back to the standard premium, okay?
So did that standard premium raise from the
It-
104.90?
Yeah, it was 104.90 last year, and some people are still paying 104.90. There's a provision in the law that says, it's under the hold harmless provision that says, if there is no COLA, there's no cost of living increase this year, unfortunately, but there's an increase in the Medicare premium, that folks, unless they're in a higher income bracket, they're not spared that hold harmless, are protected, and they will stay at the rate of 104.90. But any new Medicare beneficiaries that became eligible this year, or anyone that was not receiving checks, just on Medicare, just a Medicare beneficiary, they're paying that higher rate. Okay.
Thank you.
So Medicare Part B only covers 80%. So that's not complete coverage. Hopefully you have an employer that will provide you insurance when you retire to supplement your Medicare, right? If you're a municipal retiree, that will happen. If you're a state retiree, that will happen, right? Most of us will have to purchase a Medicare supplement to cover that Part A deductible and to cover that 20% that Medicare B does not cover. You will be flooded with mail when you start approaching that magic age. Flooded with flyers and information about the various plans available to you in your area. You can find through the internet on Medicare's website a lot of information about the various Medicare supplements in your area. You can also find out a lot about the Part C plans in your area, or Medicare Advantage plans as they're also known. How do they differ from a Medicare supplement? Well, in first place, you have to be enrolled in Part A and Part B of Medicare to be in a Part C plan. But if you're that healthy senior that doesn't go to the doctor much, but for maybe a checkup or two, and your doctors are in that network, maybe a Part C plan is for you. It's usually a more affordable insurance, but again, it's more localized. But if you're that senior that says, oh no, I want to go to whatever doctor I want to go to, I don't want to deal with referrals or networks, then maybe you want a traditional Medicare supplement. So again, Medicare.gov has a wealth of information, but you have another wonderful free resource in your community that can help you with these decisions. Anyone ever heard of Shine? Angels in your community, mostly volunteers that are experts in everything related to Medicare, Medicare supplements, even Mass Health. They help people that are indigent, low income, submit applications to the state for Medicaid. So many people qualify for these programs and they don't even realize it. So the Shine counselors do a lot of screening, and people contact them and help them. They also help the disabled. As long as you're disabled or Medicare age, they can help you with the choices between choosing a Medicare supplement versus a Medicare Advantage plan. And they can also help you choosing a Part D plan. So do you need a Part D plan? Part D is prescription coverage. Unlike Part B, that you should only delay or defer or refuse if you're working and covered through an employer plan, Part D is different. Medicare says as long as you have prescription coverage that's as good as or better than any of the Medicare-approved plans, fine. We don't care where it's from. Maybe it's a former employer that promised to give you prescription coverage to infinity. That's great, then you don't need a Part D plan. But if you don't, you should enroll in a Part D plan. And if you're that healthy senior that doesn't take any medicines, maybe you're that senior that just takes vitamins, that's great. But it's insurance, just like any other. So I would advise, and so would a Shine counselor, take the least expensive plan. So that God forbid if your health changes tomorrow, you have some coverage and you're not paying full price at the pharmacy for those medicines. And if your health does change and that coverage isn't good enough for you anymore, every year you have the opportunity to switch your plan. That's when Shine counselors are really busy, right? October 15th through December 7th, that's open enrollment for Part D. And again, unlike the Medicare supplements and the Part C plans that don't change too much year to year, maybe they'll increase a little bit in their premium, but they really don't change that much as far as coverage. Some of the Part D plans can. Again, and I've heard in my working experience with it that some plans this year may be great and will cover the meds you take, but if you're not paying attention, for the booklet coverage for the following year could be different. Folks can't assume that the plan they have and are using this year will work the same way the following year. So this way, we do have to look at our plans each year come open enrollment and see, it's still going to cost me the same for my meds when I go to the pharmacy next year? Or is there a plan that might be more cost effective for me? You can go to Medicare's website, there's a link that says My Prescription Plan Finder. It's what the Shine counselors use. You plug in all the medicines you take, including the dosage, and hopefully you take generics because that makes a big difference. And it will show you the different plans that will cover the medicines you take, and it'll show you what it'll cost per month. The co-pays would be what you, actually it even figures and calculates your total out of pocket for the year and gives you information on how to sign up for that plan if you're interested. If that's too overwhelming for you, remember the Shine counselors that have free service. It's during open enrollment. They do suggest you make an appointment because most of them are straight out during that time. But they are very helpful come that time of year when you're looking at your Part D plans, and also very helpful, and they can give you a lot of working knowledge, information about what they learned about the various Medicare supplements and Medicare Advantage plans. So they are a great resource in your community, and you should definitely utilize them. We enroll you in Medicare. We determine if you're eligible for it. But then once you're a beneficiary, if you have questions about coverage, I'm going to have this surgery and then this therapy and I need this medical equipment, how much of it does Medicare cover? We don't know. You'd have to contact Medicare. They don't have an office you can visit, but you can call them or visit them through their website. Once you become a Medicare beneficiary, annually you'll get your Medicare handbook telling you what Medicare covers, okay, for various services, from Part A, Part B, okay? And then you want to pay attention if you have a Medicare supplement, how it will work together. So again, I mentioned the Affordable Care Act, and what it means to you is, if you're an individual who is considering taking early retirement benefits and you're not going to be eligible for insurance from your employer, if you visit healthcare.gov, you'll be able to find some more affordable options for health insurance for that interim period until you become Medicare eligible. Okay? Fraud has always been around, unfortunately, right? We take it very seriously. We want you to be very cautious and very careful. Once you become retired, you'll see your phone won't stop ringing. Fraudsters like to prey on the retired because they know you're home, and some of you might be lonely and want to chat. Be careful. Never release your Social Security number. A government official will never ask you for your Social Security number. We already know it. Okay? So be very careful. Very careful And when you identify fraud, if it's something related to Social Security benefits, please let us know. You can even report it anonymously if you wish. You can go through our website and submit reports of fraud, even Medicare fraud. Once you become a beneficiary, you'll receive a letter from Medicare telling you about the services you received and what was billed to Medicare. We even have an agency that just combats Medicare fraud for those doctors that like to bill people for services they didn't even receive. Right? Report that. Okay? You visit our website, we have a lot of information and phone numbers if that's something that you're concerned about. Okay? And again, just a little recap of our online services, your statement, it's your homework today. For those of you that don't have an account, I want you to go online and create an account. It's with you forever. You have your account today. As you're working, review your earnings history every year. Once you become a beneficiary through that account, you can get your benefit verification letter if you ever need it for whatever reason. Simple changes like change of address, phone number, switching your direct deposit can all be done through your account. Use our estimator. Have some fun with that tonight. Play around with different ages and see what your benefit would be at one age versus another. Okay? All of our publications, I brought some that would be of interest to you. But if I talked about something else that was important to you, or maybe a family member of yours, all of our publications are available on our website too. So if you know someone that maybe could benefit from disability benefits or SSI benefits, survivor benefits, so much information available on our website. Okay? Applying for extra help. Social Security offers extra help with the cost of Part D. For those individuals that their income might be too high to qualify for Mass Health or Medicaid, but they're still struggling with the costs associated with their prescriptions. For folks that fall within the federal poverty level, they can qualify for assistance with the cost of that premium. Some people don't have to pay a premium, they pay the lowest co-pays and deductibles. Okay, and that application is available on our website too. So if you or you know someone that is struggling and they don't get Medicaid, right, but they do spend a lot of money on prescriptions and they could use that assistance, it's a free application, it just takes a few minutes. Okay, we do look at income and assets, but they're far more generous than Mass Health's, okay? And it can save people an average of $1,000 a year. So, and that application is available online too. That was a mouthful, right? That was a lot. And everyone's still awake. No one fell asleep, even though it's cozy and dark in here. Questions?
Yeah.
Yes.
When you apply for Social Security, what's the turnaround time before you receive it? And is your decision revocable at any point, or once you apply?
So, I'm sorry, what's the turnaround time?
Yeah, once you apply. If I would apply this.
So if you're already of age to receive your benefits, turnaround time as little as, as early as 30 days. The earliest you can start the process is 3 months before. Okay? So you file your application online, we get it the same day. And they are given priority attention. Anything that was filed online, be it retirement application, disability, they're given priority handling. Because the way the commissioner looks at it, if you took the time to do it and submit it yourself, we're going to process it right away. Yes, ma'am.
What is your Social Security current recommendation concerning applying online versus applying in person? The reason I'm asking is there's information online from a professor of economics at Boston University that some people who applied online, say 2 months and 3 weeks ahead of their birthday, for their 70th birthday, the money started coming through right away. So Social Security cheated them out of 3 months. So this professor says either go in person and repeatedly say to the person, It's 2 months ahead of time, it's 3 months ahead of time. I'm not applying for today. I'm applying for my birthday, which is, and then keep saying your birthday and the month of your birthday.
We
and
know
make
your birthday.
No,
So,
but
I read
that's
that
not-
article.
that's
The
not the
person simply just had to say, I want benefits no earlier than my 70th birthday.
Right,
It's as simple as that.
right, well,
On
that's what
your
they thought they were
application,
doing.
You get more than one page of remarks, because I read that article,
Mhm.
and it was very twisted, parts of it. All the person had to say in remarks is, I want benefits no earlier than age 70. What is there to be confused about? Just like if someone says, I want benefits, I do not want reduced benefits, okay? Even though you submitted 3 months before. And anyone that files online, it doesn't mean you can't call if you have any hesitation that, or concern that there's any misinterpretation, you can always call the office and say, you received my application, you understand I do not want benefits earlier than, it's as easy as that. It's still processed by a real person. You can still call us if you have any hesitation, you know? Yes.
Okay, when does the first check come? Say you turn, like, personally, myself, I turn 62 September 5th. I want to apply 3 months, or I read 4 months, I can apply before 62. Will my first check be October 1st?
So if you're 62, you have to be 62 for the entire month. So the first month you'd be due a check would be for October, because that's the first month that you're 62 for the whole month. And our checks are paid a month behind, so you'll get the check in November for October. When in the month will you get it? Depends on your birthday. So it could be on the 3rd of the month, or it could be staggered throughout the month on Wednesdays. So depending on your birthday, so if you're born at the end of the month, you get your check on the last Wednesday of the month.
But they'll let you know.
Absolutely,
Yeah.
absolutely. You had a question too, sir.
The situation, in my situation, I'm 65, my wife is 66. Is my wife able to take Social Security before I turn 66?
No.
Okay.
She can take her own.
Or take her own?
She can take her own if she
No,
wants.
big pardon, no, she doesn't qualify. She has enough units.
Unless she was your ex-spouse.
No.
And I'm sure you don't want that. I think this lady had a question, then I'll go back to you.
Just two things. One, I want to know if you have any windfall information here today, the windfall publication that it's mentioned in here. And then I have a second question.
So I don't have it here, I might have something in my car that I can go get you. But it is also available online, the estimator that factors in the windfall. To be exempt from the windfall, if you have, which is the only one that folks could meet today, if you have 30 years or better of substantial earnings paid into Social Security, so
The second question then is, so if you delay applying for Social Security beyond the age of 65, you have to
Six.
You have to have Medicare.
if you're
So-
retired, yes, if you're not covered through an employer plan, active employment.
Okay, my employer makes you sign up.
Yeah.
The retirement makes you sign up for
Medicare.
which means then I have to pay out of pocket because I'm not collecting
Yes.
Social Security.
Right, they'll bill you quarterly for the premiums if you're not collecting a check. Yeah.
So I adopted my grandson. He is 6. Now, I can collect because he's dependent under the age of 18. Is it based on my full retirement? You get 50%
An
of,
auxiliary benefit is always based on the full retirement amount.
even though I collect early? Okay.
It's always based on the full retirement amount.
Okay.
Questions over here? All right, thank you. Oh, I'm sorry.
As far as taxes being deducted, can you set a certain amount by
Yeah.
yourself or?
Yeah, when you submit your application, if you already know, and you say, I want 7% deducted, or 5%, you can send us a W-4 with that percentage, and we'll deduct it automatically from your monthly check. But if you submitted your application and you didn't indicate that, but then later you realize, oh, I should have, you just mail us a W-4 that you can download from IRS's website, and we'll start it for you. If you want to change it or stop it, same thing. Okay?
Yeah, you don't make appointments when you, like, if you want to go to the SSA over in town, you have to call ahead, or is it just a walk-in?
Because they're all very busy, the urban offices especially, they prefer to take claims by appointment if you're gonna choose to walk in. Yes, sir.
When you come to take Social Security, and your spouse does not qualify for her own, is it taken as a couple, or is it divided by the spouse?
You each get your own benefit.
Each gets your own benefit. Is there any advantage, disadvantage then to one party taking it, the other party deferring it to 70
It's a personal decision.
for each?
Yeah, but if you're going to take your own retirement and you also do a spousal benefit, there are new rules that say you have to take both at the same time. You can't defer one.
Okay, that's the question.
Yeah, that's a new rule. And that, you can find the specifics on that too on our website. The Bipartisan Budget Act of 2015.
Last year, November, that was enacted?
Sorry?
That was the
In
bipartisan
November,
budget
yeah,
last
that
November?
tightened some unintended loopholes in the program that, that not most people, but some individuals were using different strategies to maximize their benefits, such as that, but that's eliminated.
Is there anything going on that may decrease the number of Social Security payments to beneficiaries? Any legislation being looked at?
Oh, it's-
Cutting?
It's, they're definitely, it's a fact that the fund is getting low. When Social Security first came into, when it was first written into law, we had 5 workers for every beneficiary. It's projected that by 2035, we'll only have 2 workers for every beneficiary to ensure that full benefits are paid. If nothing is done, we can only pay 79 cents on the dollar in benefits. So it wouldn't cut benefits completely, but they could be cut if nothing is done. I'm sure if you follow what's going on in Washington, it's a topic that's being discussed. But I don't know what it will pass. I don't know what changes will come into to be. That could be another meeting to discuss what does happen, when it happens.
A follow-up to the question over there about when the first check comes. Suppose someone's birthday is toward the end of the month, let's say around Thanksgiving, and you said then you have to have one entire month that you are the retirement age. So that would be December. So then the first check would come.
The only month you have to wait a full month to be eligible is that age 62 month.
Oh,
But
no, I'm talking full
And
retirement.
any other month after. So if your full retirement age is June, and that's when you want to start collecting benefits, you'll get your check in July for June. You don't have to wait a full month.
Okay, so
Be
in my,
66 for the whole
in
month.
my example, if your birthday is around Thanksgiving, and this is assuming that you have filed ahead of time, all your application is in and everything, your first check would come in December. Okay, all right.
So is the calculation taking into consideration months or just the year? How old you are? In other words, if you're 60, say you want to retire at the full age of 66, you would go in for your birthday month to do that, or would you want to?
So if you want to start collecting at age 66, yeah, you can apply as early as 3 months.
So you don't get any increase monthly after that, say you wait till 66.5, you know?
Yeah, you get an increase.
Oh, you will get it.
Yeah, every
So it's
month.
months, every
And
month?
any month you delay after full retirement age, you get an increase.
Prorated.
Yeah.
And they can give you those figures when you're calculated
Yeah,
out.
it
of
does.
an
It does. It lets you create those what ifs. Yes, sir.
Does the government pension offset kind of go away? Say like if I wait till my full retirement age? Or,
The government pension offset applies to spousal benefits, widow's benefits. And remember, as I said earlier in the presentation, spousal benefits, there's a dependency there, right? So what the government pension offset does is, if you are eligible for a non-covered pension, state pension, municipal pension, and technically eligible as a spouse, that benefit has to be reduced by 2/3 of the amount. 2/3 of the amount of your gross pension, because you have other income.
because you have other income. Now,
Right.
say should I pass, would my wife be entitled to going back to what's in that social security that was earned?
Wait, is the government pension offset applicable to you
Does
or
it
to
just
her?
Go away? Or will that always be,
Government pension offset, once it applies to you, it always applies to you.
right, but say for my spouse, should I pass?
But your spouse is not affected by your pensions.
She sure is.
What do you mean?
She would be the recipient, right?
Right,
Survivor benefit.
but, oh, you mean survivor benefits?
Right.
Right.
And
Well-
let's throw in there, if I had a disability, does that pension offset
If you have
still?
if you have a disability pension from the municipality, yes. Any type
So
of
it's a win-win situation for the state.
For the
It's-
government.
it's a non-covered
win-win.
pension.
It's win-win.
Wow,
That-
I'm just the messenger.
I know. Understood.
All right, well, thank you for your time.
Thank you.
Thank you.